The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 3rd, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with some empowering beliefs. It's called appreciating everything and everyone, because that is the meaning of thanks living and the spirit of the holiday season. You know, for some, the spirit of the holidays might seem to be a bit full of anxieties or concerns or just simply a variety of worries out there. And if you know someone like this, let's help them by suggesting that they try releasing their limiting and restricting beliefs. Instead, let's help them move towards an extraordinary outcome, what I call the spirit of thanks living. In fact, all we have to do is focus on the name of the holiday, you know, Thanksgiving, or what I really like to refer to as thanks living out there. So here's the idea. This is an extraordinary habit for each of us, and that is to look for something to appreciate in everyone we meet. And there's no better time than today to begin this journey. So I challenge you to give it a go. Look at each person you come in contact with and identify at least one thing they do or one thing that you could appreciate in them, and then privately tell them what you appreciate. You see, we can all be generous with appreciation, and it has a nice side benefit. It improves every single relationship. In fact, it may bring new courage to those facing difficult times, and there's really no way for us to know when someone might be dealing with, and since we don't know that, it'll definitely bring out the best in everyone. Recognition, folks. Give that gift of appreciation as generously as you humanly possibly can. For me, there are so many things that I am grateful for, but the three most important are, number one, being alive. Number two, having a pretty good mind. And number three, having the wisdom to say thank you. Thank you, folks, for investing your time with us here at TFNN, investing your time with me each and every day. I am grateful. You know, giving thanks, it opens up the door to growth. The time is now to begin thanks living. Let's go check out the thanks living in the markets here. Right now, the Dow is off 38 points. S&P is off 1.5 points. NASDAQ, that is a strong little puppy. NASDAQ composite up 4 points. Russell 2000 up a point right now. NASDAQ 100, that's up 5. New York Stock Exchange down 22 points. Our call number is 877-927-6648. Let's go see what signals we've got here in the marketplace this morning. If you were listening to the 9 o'clock show, we began by taking a look at the 120-minute chart. Since then, I've gone ahead and drawn a little descending price channel inside of the ES Mini out here. Now, as we were coming on at the 9 o'clock time frame here, 9:30 time frame on the 120-minute chart, we were noticing that price had moved down into the extreme oversold condition. Last time we saw that, as I had mentioned, was down at about 4 o'clock in the afternoon. That was on November 7th. We said that that condition needed to be worked off. Now, as I took a closer look at the chart out here, I noticed that we have a little hammer candle that had formed on the 120-minute chart. That was actually coming in at the 8 o'clock session out here. Didn't notice that. And then it was followed up with a nice big bullish engulfing candle. Even though price pushed lower during that 120-minute time period, you got the so we know where the bulls are hanging out and defending their territory. That means you've got some support out here at the 1792 level. Right now it's trading out at 1790, 775. It's going to be an important area to be paying attention to see if that level holds. Now, where is price at the moment? Well, we're going to go take a look at, if you take a look at actually off of the last, if you take a look at this high, we're going to take a look at two different levels. We're going to take a look at coming at 4 o'clock this morning down to the low. You'll see that you're right about the 0.618 retracement level, 1797.50, and you're at 1797.50 right now. So you're at the 6.8 of that. And if we take a look at this swing point from 2 o'clock in the afternoon, that was on December 2nd. That was yesterday, down to the low. We're going to see we're also at the 0.382 retracement of that area. In fact, the very top, 1798.50. The high that we saw so far was 1798.50. That's the high. So you've got two Fibonacci. I'll get it out. Don't worry about it. You got two Fibonacci retracement levels. It's where price has made that bounce to at this stage. Now, if price is able to get above this level, where it's likely to give us a piece of information is as it moves into this descending price channel up here. It's a 120-minute chart. I can't give you what that area is, where it would move to. That could be about the 1800 area range. That would be about another 3 points higher out there. So that's what's going on inside the 120-minute chart for the ES Mini out there. Let's go. Now, we are also taking a look at the VIX index here. The VIX index that had gapped up. That is above the 50-day exponential moving average. It's traveling right now at 1448. If this is not a one-hit wonder, that is a danger sign out there. So we're going to be paying attention to that all day. By the way, the 50-day exponential moving average right now, 1382. If somehow it moves back below 1382 today, then this morning was nothing more than a one-hit wonder out there. And there are some that take place. And if it stays above that level, that is a very dangerous sign out there, because carnage is done in the marketplace when the VIX is above the 50-day exponential moving average. Let's go take a look at our indexes out here. Let's take a look and start off with the New York Stock Exchange. New York Stock Exchange right now traveling out at 10,111. It's below the 10,127.63. That is on the lower side of that three drive to a top pattern that appeared to have failed, but now it's back underneath that portion of the range. We also had, we had the oscillators yesterday get below that zero line. Both the price oscillator, the volume oscillator got below that area. So the New York Stock Exchange has to give the benefit of the bears, has to give the benefit to the bears out there because of the summation index ticking down. So we'll see. Where is it that this could pull back to? Well, if you just simply take a look at the low from August 30th up to the high out here, we'll use the high from 2 trading from Friday, November 29th out there. Your dead cat bounces 98.54, 96.22 would be the more likely range for a pullback out there. That is on the New York Stock Exchange. If we take a look at what set things off yesterday, at least set things off in my mind, it was this island reversal pattern. I got to kind of wide this up here, but this is inside of the Russell 2000, which, as we know, has been a strong little pony in this market out here. But there was a gap up. That was in between November 27th and then on Friday, so that was the Wednesday to Friday gap. But then yesterday we had a gap down, ever so tiny out here, still a gap that set up an island reversal. The low of Friday's session was 1142.52. Yesterday the high was 1142.30. So you had a little gap, a little 20-cent gap out there. I know it's hard to see on my screen, but trust me, I just gave you the numbers. It is an island reversal. Now, those are very bearish. We've seen these markets here. It doesn't really care much about bearish patterns out there. Nonetheless, I say you still have to pay attention to them. So the Russell 2000 was just screaming yesterday with regard to its significant reversal pattern inside the marketplace. That, along with the VIX, along with a number of other things, says today's trading session is muy importante. So we'll see where things end up. Let's go back to the S&P 500 here right now. Really not doing too shabby, not doing too badly out here. It's trading out at 1797. Let's move to the Thanksgiving thing. I'll rework that here later. We take a look at the natural pullback here. It's going to be to test out this little primary trading range boundary line right around the 1745 level. If we take a look at the retracements coming off of the last leg, the October 9th low, that's at 1646.47 all the way up to the high out here on November 29th. You'll see that's also the dead cat bounce. That's the .382 retracement. So the minimum move, if in fact we are seeing a move down inside the marketplace, that should be right around the 1749, but more likely I would say 1710-ish or so. That is on the S&P 500. Let's go take a look at the Dow, see what it is doing out here. We take a look at the daily chart out here. This says that we should see the Dow pull back to about 15,463. That's its next primary trading range boundary line out here. We take a look at the retracements off of that low in October the 9th out here, all the way up to this nice run that it has made out here on November 29th. We take a look at the dead cat bounce as 15,618. So I'd say 15,618 to 15,463 is the likely first target out there. The secondary target, that becomes your sweet 618 retracement, 15,275. Excuse me, that is on the Dow. Need to grab a sip of water here. Thank you. Sorry about that. Let's take a look here at the. We looked at the Russell. What I didn't do on the Russell is give you any kind of price projection out there. Shame on me. Don't let that happen again. You see that happen again. So 1,039 is the likely area. That's the swing point from October the 9th. With that island reversal pattern, I would expect to see this not just make a retracement, but make a dodge all the way down to that primary trading range boundary line, which is also an important swing point, the October 9th level out here. The 0.618 area, that'll take us back into the swing points here from November 7th. So 1079 is certainly a normal target. So 1079 to about the 1036-ish type range is the likely target for the Russell 2000. NASDAQ Composite, let's take a look at this. It did give us a reversal signal yesterday out here. That's after doing the 1 to 1.618, A to B equals CD pattern. The A point on this being the low from August 27th, your B point being up on October the 2nd, the C point being the retracement on October 9th down at 36.50. That made a 1 to 1.618, A to B equals CD, and yesterday you did have a bearish engulfing candle. Not a key reversal session. Doesn't really matter. You did have a bearish engulfing candle. What you want to see today to confirm that bearish engulfing candle is a move lower. That means a close below 40.88, and that would be your signal of a confirmation that, okay, this is too is going to pull back. Where will this pull back to? Well, we can't, again, just take a look at normal retracements here. Coming off of October 9th to the high that was put in on Friday, your dead cat bounce, 39.09. Your 0.618 retracement, 38.10. Those are the target areas for the NASDAQ Composite. And then NDX 100, you've got Apple on the move today. We'll go check in on Apple. You got Apple is up $10. Tesla's up 14 out here. Right now, the NDX 100 also gave us a key reversal and a bearish engulfing session out here. It says you should be seeing some real strong resistance. That's up at the 35.01 level. We also did very close to the 1 to 2 A to B equals CD up on the NDX 100 yesterday. The 1 to 2 A to B equals CD would have been 35.10. The actual high, 35.01. That was on yesterday. But it did have a bearish engulfing key reversal session. So, we've seen a number of reversals. Today's action, though, is very important to see how, in fact, this plays out. And the VIX is one of those things that we want to be paying attention to. Let's check out the ETFs here. We've got about 10 seconds to do one of them. Let's take a look at the IWM here. The IWM yesterday moving lower with some conviction, almost 100 million shares as it was moving lower. So far today, it's done 22 million shares. So we've got some volume. Only been trading for 45 minutes in the trading session out here. We've got some volume inside of, that's the SPYs that we were taking a look at. My apologies. I thought I was pulling up the IWM. When we get back, we'll pull up the IWM. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow down 48 points. S&P is off 2. I mentioned the IWM. I grabbed the wrong ETF. That was earlier. We were looking at the SPYs. But in the case of the IWM here, yesterday moving down with some volume behind that move. 43 million shares after making a high on Friday with 15 million shares. On Wednesday, moving up with 30 million shares. On Tuesday, 30 million shares. So we're starting to see volume come out of the SPYs now. Out of the IWM, the small caps out here. Now, the key here is going to be this level, this little doji candle that formed on October 29th. That's the area of potential support. That level has not been tested, and that is 111.62 out there. So watch 111.62, but the IWM had some volume off of the highs, off of the top yesterday. Let's take a look at the diamonds, see what the diamonds here did yesterday. The diamonds made a high on Friday. Of course, light volume session, only 3.5 hours out there. 2.8 million shares yesterday, moving down with 5.6 million shares coming into the last time that it moved up with only 4 million shares out there. So far today, this has got volume in it. It's already got 2.2 million shares, and we've only been trading for an hour's time. So it looks like volume is back in the marketplace. Thus far, it's volume to the downside. Let's finish this off by taking a look at the Qs. The Qs not trying to give up anything out here. It did form a bearish engulfing candle yesterday. That says resistance is the high of yesterday, which is 85.96. 26 million shares. So far this morning, it has done 8.6 million shares out there. had a request to take a look at the commodity sectors out here. So let's begin with Goldilocks as we take a look at gold. Moving into the swing point from June 28th. Yesterday did it with 113,000 contracts. Coming in light, that has 260, so 50% of the volume. And it's trading inside that level, but that does say when you trade inside a swing point, it says you can go test the bottom. 1179 would be the number there. That's on Goldilocks. On silver out here, silver also closing inside that June 28th swing point. Volume there was 89,000 contracts. Yesterday did 30,000. So coming in with light volume, but it still says, you know what, it's going to go test the 1818 area out there. Can't tell you when. You'd like to see it done here relatively quick. What we do see here, as we take a look at the silver chart thus far, we might have a little diverging price relative strength indicator pattern out here. But we got to take things one moment at a time. We'll take a look at it when silver gets back to that level. If we take a look at light sweet crude out here, light sweet crude breaking through this descending price channel and doing it actually has a little bit of a buy signal. Now, the volume here yesterday, 143,000 contracts. This is, well, it's a continuous we're taking a look at here. I don't know if somebody taking a long play here in light sweet crude. Is that what's going on? You know, we know it's working. We know that it had a little price RSI divergent pattern out here as it was making its low that it came in on November 5th. That had the push down. I would have to say that if you're looking to take a trade in light sweet crude, just have a stop underneath 91.77. That's going to be the low of the trading session from November 27th out there. So I don't know whether you're playing UCO or something along those lines, but it has broken that descending price channel out here. It broke it yesterday. It had broken it just barely on November 21st, and then it stayed above it on the 22nd as well. Got back inside there on November 25th, back inside. The primary trading range boundary line, the black, you know what? I guess I have to redo this because that's the old system out here. This way we'll get the numbers out here for you. So let's just pull this back here. Let's actually run that, and I can give you some numbers to be paying attention to out here. And the system, folks, it goes out and it takes this chart and it takes a look at every open and close out there that we can see on the chart and identifies the largest point of contact. That's going to be the dark line, the dark navy line that shows up on my screen. There we are. 93.10 is the number. So 93.07, you know, as I scrunch this chart up and down, those numbers change a bit. So it's really the $93 area is your primary trading range boundary. We see how price came down there. It held that level with the exception of really two trading sessions, which was November 27th and November 29th out there. So what does that say if we've got a decent bit of a low out here, or where could light sweet crude bounce to? Well, I just take a look at the dead cat bounce, the 0.382 retracement level. That would be your natural move. That would be up to about $99.59 out there. If you can get above that, then 104 would be the target area. That would be on light sweet crude. If we take a look at, not suggesting that you take that trade, but it did break a descending price channel out there, and that is bullish. If we take a look at bonds here, bonds still want to complete that move down to test the swing point lows. That is out at the 128.12. You know, we get back from the break, I did do a little bit of researching to take a look at what the large commercials were doing with Goldilocks. You might be surprised. I'll tell you about it when we get right back here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow down 57 right now. S&P is off about 2.5. And let's go check in on markets around the globe here. Let's take a look at the FTSE now. The chart I've got up on my screen here for the FTSE, this is the weekly chart that we're looking at, the couple different lines out here, but you can see that this has struggled to get above the 2007 highs out here. On the weekly chart, it tested it to try to do that back on May 24th out there. Got up to a high of 68.75, 68.79 was a primary trading range boundary line as well. So it acted as a resistance area. Price pulled back into the bottom of this rising price channel. Didn't make it its way all the way back down to that level. I suspect it will this time. We can see on the weekly chart, got up and tested the 2007 highs again. Did it for 2 weeks in a row. Did it for the week of November 1st as well as November 8th. Couldn't bust it up. Now it'll try to bust it down. You do have a hammer candle right here. So I would say that we should see the FTSE pull back to the low of that hammer, right around 63.16 or so. As it's doing that, looks like it'll careen into the bottom of this rising price channel out there. Until that rising price channel is broken, not a lot of damage. That's the rising price channel coming off of the 2009 level out there. So that is on the FTSE. That was the weekly chart that we're looking at. Let's go take a look at the DAX. We're seeing some damage being done here inside of the DAX today. It's trading at its session lows, or very close to it, 92.57.55. The low is 92.51.38 out there. This is taken back in essence, 1, 2, 3, 4, 5 trading sessions so far out there. And this is also moving back into, so if we take a look at the DAX, this is the daily chart, you can see its rising price channel. Let's just change the color of that. We'll make that red for the moment here. So what the DAX did is coming off of the lows here. Looks like one of the other charts we looked at might have been the NASDAQ or something. As we take a look at the April 22nd low for our A point, our B point would be the high of May 21st. That was as price was running into the top of that rising price channel. Makes a retracement out here. Looks like a little bit more than a 0.786 retracement. Does that on the trading session of June 24th. Goes ahead and makes a 1 to 1.618 A to B equals CD right around the 94.70-ish, 95 level out there. Now it's getting back inside of that rising price channel out here. So where is it that the DAX is likely to pull back to? Well, if we just take a look at natural retracement levels coming off of this August swing point level up to the high here in November, you'd say the dead cat bounce, the 89.30 is a very likely range. I'd have to say more likely right around the 86.24-ish price point. That is inside of the DAX in Germany. Let's take a look at the other markets over in Asia, 3 other markets over in Asia. Let's take a look at the Nikkei. The Nikkei was up last night, formed another little doji. It says that it's running out of energy. We've got 3 dojis in a row here inside of the Nikkei. Now, the Nikkei had broken this consolidation pattern, and that said that, really wanted to travel up to the 16,000. Still may. It's at closed out last night at 15,749, but you've got 3 dojis coming into a resistance area. I say resistance because, folks, this is a huge bearish engulfing key reversal session, everything. You're talking about May 23rd, 2013. So you can see how it's trading into that level here as we speak. So that is resistance, big resistance. This took back in one day, went from May 23rd, went back and took back everything up until May 10th out there. So that was quite a big pullback, and that was inside of the Nikkei. So it is running out of energy, which just really means it's running out of buyers out here. Maybe the buyers are looking off to the left-hand side of the chart and saying, there could be trouble over there, trouble in River City. So you got 3 dojis in a row out there, and that's inside the Nikkei, even though it was up, a total of last night, it was up 194 points, $94.59 out there. Let's take a look at the Shanghai and the Hang Seng, see what they're doing. Here's the Hang Seng. This has got an A to B equals CD pattern out here. No real reversal sign here inside of the Hang Seng yet. It says it's on its way up to 24.555 at this stage, without a reversal candle forming, and we do not see one at the moment. Let's go take a look at the Shanghai, see what the Shanghai is doing. It too has a to B, a large A to B equals CD pattern out here. Now, it's got this little doji from November 29th out there that says that and this is also inside an area of some resistance out here. So you need to see the Shanghai close above the 23.29 level, close at 23.26 last night. If you see it close above that area, it should go ahead and continue to try to attempt this large A to B equals CD up 26.18. But first, it's got to take out these swing points from back in September. Let's take a look at, we didn't look at natural gas. Let's go look at the January contract here for natural gas. Right now trading out at $3.99 out here. It's taking, it's strong. It's making its 100% move by getting back into the swing points here from October 15th as well as September 19th. But right now trying to take out this nice Gartley sell pattern. Doesn't matter how nice they are. You need to always wait for a reversal signal, and that we do not have inside of natural gas, not as we speak right now. Let's check out some of these stocks here that are moving and grooving in the marketplace. The big mover and groovers, Apple, Tesla. Let's go take a look at those 2 equities, see what they are doing. Apple right now is up about $10, $9.59 here. Trying to tackle yesterday's candle session out here, just a little dark cloud cover, so not a huge reversal in Apple yesterday, at least candlestick-wise, and you gapped up this morning. This is actually a bull separating line, so it's very bullish inside of Apple as we take a look at its candle formation. That says that the 572 mark, that would be your 1-to-1 A to B equals CD, says that is still in play out here. Apple in the extreme overbought territory, but still should have enough energy to move up to about 572. A strong candle formation here yesterday, telling you that those clouds were nothing more than a storm that just simply couldn't get its act together. Let's take a look at Tesla. TSLA is the ticker symbol. This thing has been crushed. Let's take a look and see what it is doing out here. I know I don't have all the data. Let me a second here to see. There we go. So now we take a look at it. Gapped up here this morning. Let's pull this back. Tesla had moved all the way down. How about that? Moved down to its 200-day exponential moving average. That's the green line going across the bottom of my screen. The price point level right now is 120.09. It's trading out at 137, but take a look at that 200-period exponential moving average. The bulls trying to hold this thing into place out here. Volume so far today, not too shabby. Volume to the upside of 9.8 million shares. That's going against this little downdraft of 23 million shares from November 18th, but that's not too bad. We've been trading for an hour, so it's got some volume on this move up out here. That is in Tesla. I'm not suggesting taking a long trade inside of Tesla. It's got to deal with this little downdraft, this little supply line from November 6th, 31 million shares to the downside. But let's take a look at today's volume. 9 million shares in an hour. It should have no problem volume-wise. Now, volume obviously is more weighted in the first hour and the last hour of trading, but this has had some pretty good volume in that first hour of trading inside of Tesla as it comes off and it bounces off that 200-day exponential moving average. Let's go take a look at IBM, a couple other stocks out here. Let's see what IBM is doing. Right now it's trading out at 177.99. It's off of its session lows here this morning, but it's traveling inside this little descending price channel. It is below that consolidation level. That was a 30-point consolidation level. What IBM is signaling to us is that it wants to move down to about the 150 level. And that'll take it all the way back into the swing points right back here where it actually takes it right back to where IBM broke out. How about that? There's a gap inside IBM, takes you back to January 19, 2011, the low of which is 152.83. That's the low of the January 19th session. The top of the gap I'll use, which is the high of the prior session, that's at about 151.46. So how about that? You break the 30-point consolidation. We're traveling below that right now, and that says that wants to travel down right into that gap. Volume back there was about, as I think I mentioned, 12 million shares. When this thing had pulled back, it pulled back with some big volume. It gapped down with, 22 million shares out there. So that's what it looks like Apple. Looks like IBM wants to do. Let's see, what else do we have in here? We've got Amazon. Let's go check out Amazon. See what it is doing here. It gapped up yesterday. No reversal, no island reversal or anything like that. But down today with the volume of about 1.3 million shares. Made a high yesterday with 2.5 million shares. So you're starting to see a little bit of profit taking inside of Amazon. It's got some support here where it broke out on October 25th. Did it with 12 million shares. The high of that candle is 368. If it closes inside 368.40, that brings into play a filling of the gap, which would take it back to about 326.75. That might be a nice buy point inside of Amazon. Let's see, what else do we have? We've got J.P. Morgan. Let's go check out J.P. Morgan, see what it is doing out here. J.P. Morgan, let's see if this is a confirmed A to B equals CD. The B point on this is your swing from July 26th. That had 73 million shares, got above it with 102 million shares. This actually says in yesterday's action inside J.P. Morgan, no big deal. Yesterday, so far today, no big deal as well. J.P. Morgan setting up to move to about the $60.50 range out there. Let's take a look here at ExxonMobil. ExxonMobil, you got Warren Buffett buying into ExxonMobil. I'm assuming he was buying down here around this low of this consolidation range. Of course, I don't know why I would assume that, but that would seem the likely logical area to have stepped into this equity. That was down around the 85 level. You're trading right around 95 right now. You're trading at 94.16. This price broke the consolidation, came back and tested it here yesterday. You're trading back above this. this really does say, and it broke above that consolidation level with some conviction. You had 18 million shares. That was on the November 15th session. That was going into a swing that only had 7 million shares. It really does say that ExxonMobil eventually wants to trade up to the $100 mark out here, so long as it can stay outside of this consolidation area. So yesterday, just really a test of that area. That is on ExxonMobil. Let's see. We've got Google. Let's go see what Google is doing out here. This is the monthly chart. Let's go change this to a daily chart, see what Google is doing. Not really, not much. Not doing too much out here. The pullback yesterday, no big deal, 1.3 million shares to the downside. Today, it's already done 495,000 shares. So Google not exactly falling apart out there. That's the strength inside of the NDX 100, inside of the composite, which are up as we speak. Let's see. What about some equities here that are popping and dropping that we have not looked at? Let's go take a look at the upside. Stratasys, SSYS, those 3D stocks, they got hammered just a while back, a week ago or so. SSYS, that is up this morning here. That is up by about, where did it go? It was on my chart here. It's up about 3.5%, up $4. This thing here broke down with some volume, not as bad as X1. We'll go check in on X1, see what it is doing here. But this equity came down hard with volume, 2.7 million shares, made a lower low with 3.2 million shares. That is untested, was not coming back into a breakout area or anything. So far, it looks like we're just setting up maybe the B to a C of an A to B equals CD up. If we take a look at the retracement levels here, you come off of the high from November 18th down to the low on November 20th. Your 0.618 retracement level, that's what it's trading at or near right now, which is 124.07. So far, intra-session high is 123.52. Volume so far about 588,000 shares. That's going into a downdraft of 2.7 million. Still not too shabby today. You take about 600,000 shares times, that's about 3.5 million shares or so potentially for the day. And it came down with 2.7. We'll come back and we'll take a look at these charts here tomorrow and see what the real volume inside of some of these equities. But let's take a look at X1 because that thing really took a hammering. Let's go see what that is doing here. XONE is the ticker symbol. So XONE coming down off of its, is that the one? Yeah, it came down from $62 down to 51. Did it hard in 2 days time period out here. 1.2 million shares and 1.2 million shares on November 20th and November 18th. So far today, moving up with 147,000. So this one does not have the same type of conviction that Stratasys does. And what is this? Let me see what else this might be doing out here. We take a look at the retracement here off of its recent high. That retracement that we're looking at, that's coming off of the, come on, tool. There we go, coming off of the high from November 14th down to the most recent low on November 25th out there. It looks like it's headed to probably about $59.29. That's your 0.618 retracement. That would make sense because that's where you have one of your breakdowns, the high of which is November 20th at 59.80. Right now, we've got the Dow is off 51. S&P is off 1.5. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is off 55. S&P is off 2. And let's take a look at the different setups here. What is it that we need to be paying attention to for the day? So let's go through this one at a time. Number one, we want to be paying attention to the VIX index. Right now, the VIX index is traveling out at 1446. The 50-day exponential moving average is 13.82. So long as the VIX stays above the 50-day exponential moving average, that is where you start to see real carnage done, damage in the marketplace. To what extent? Can't tell you whether that lasts a few days, whether it lasts a few weeks out there. What I can tell you is that every time the VIX gets above the 50-day and stays above the 50-day, so long as it's not today is not a one-hit wonder out there, then it says you need to be very careful inside the marketplace. Just at least make sure you use stops. I'm not saying, to necessarily short the market. I'm not saying to, exit your long positions. I am saying to make sure that you use stops, because when the VIX is above the 50-day, that is where we see damage that is done inside of the marketplace. And this doesn't have who cares what the Fed is doing out there? If the VIX gets above the 50-day, because we can go back to 2009, we can go back before that, it's just simply a rule that is steadfast and it works. So that is one area that you want to be paying attention to. That is on the VIX index. Number 2 out here, I'd say the Euro-Japanese yen, because it points the way right here. This is the daily chart that we're looking at. You can see it's now at the, we've had a nice bounce in the market, but you can see the Euro-Japanese yen, it's at the lower part of its trading session for the day. It's at the lows of the day out here. This has been testing this little resistance level, not formed a 1 to 1.272. It did the measured move of the consolidation breakout. It formed a doji, said it was tired. It did that on Friday. We have not seen a break of that high, the high of which is 139.69 out there. That says, okay, this thing is ready to pull back. If this pulls back from the direction of our markets, they should also pull back. So there's another signal to be paying attention to. We were looking at the 120-minute chart. That was at about 9 o'clock, 9:30 this morning. And when we took a look at that, we said, hey, this thing has to work off its oversold condition. That's what it has been doing. Formed a little hammer candle. That was at 8 o'clock this morning. Then at 10 o'clock, it formed a little bullish engulfing that says that support at 1792 is a very important thing. You see it close below 1792 on the ES Mini. That is a very bearish thing to be taking a look at. We take a look at the 30-minute chart here. 30-minute chart, again, the very right-hand side of my screen. That shows your Euro-Japanese yen. That shows us moving lower here. It's not oversold, so there's no reason for it to not move lower out here. So a bit of divergence with regard to our markets here moving higher. But our markets on the 30-minute chart really had to bounce. They had no choice, but the rubber band was stretched as far as it possibly could go. That was taking place at 7 o'clock in the morning to work that condition off a bit. And we've seen a nice little bounce here. That bounce is nothing more than a dead cat bounce, and that's using the C to D. That's coming off of the highs here, the swing point at about 1 o'clock in the afternoon. That was yesterday. That was out at the 1809 range, down to the low so far, put in at 9:30 this morning out at 1792. 1798 was the .382 retracement level. Hey, if the ES Mini gets above that, if the Bernanke bulls move in, then 1802 would be the next target, the .618 retracement level. We want to watch, I would say, another price for you to be paying attention to inside of the ES Mini is 1792.75. That's the number we'll use here right now. If you see it close below 1792.75, we will have officially seen a change in trend taking place inside of the S&P futures and the S&P 500. Folks, thanks so much for being here. It is terrific Tuesday. If you're off to start your day, have a terrific day, and I'll look forward to seeing you in the morning. Take care. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.